Hey guys, if you are growing an IRA for retirement or trying to build wealth or trading any kind of serious money, you have to be trading the S&P 500. I've got the S&P 500 on the screen here. We've talked about it a lot. You have to be in the S&P 500. There's several ways to trade it, but it represents the overall economy, 500 of the largest traded stocks, etc. But there's a problem, and it's so easy to fix. The problem is that most people that trade the SPX don't understand European expiration versus American style expiration. So that's what we're going to talk about today. So if you're new to the channel, welcome. My name is Bruce Marshall. I'm with Simpler Trading, and I've got to give a shout out to, let me look over here. Doug Adam Wired is a subscriber who requested this video, and I'll say it again at the end of this video, but if you have any questions, comments, or want me to do a video on something, just let me know. But the question is, please explain the difference between American style and European style options. So let's jump right in. We'll try to keep it short. All right, so if you are trading stocks, Amazon, Apple, Home Depot, Walmart, that kind of stuff, Amazon, Home Depot, all that stuff. All those are American style. And we're talking about options here primarily, and in the sense of maybe covered calls or whatever we're doing, to grow our wealth and be conservative option income trading with it, right? So those are American options. We'll just divide this into two. And I would give a shout out to whoever I got this chart from. I just got it off the internet, and I don't know who put it together, but it was a good chart. So American options, if you sell a covered call on your Amazon shares, they can be called out at any time. Anytime the option, it doesn't matter if the option's got 6 months left on it, they can be called out the next day. They can be called out a week later, a month later, it doesn't matter, right? They can be called out if you have a dividend upcoming and somebody else wants that dividend. They can call your shares away and they get the dividend and you don't. That's a risk with it, okay? Very reasonable or serious risk with it, actually. The other thing too is that when you're trading American style option, there are shares. So if you buy 100 shares of Home Depot, you have physical shares. Back in the olden days, I've been trading professionally for over 35 years, and you could actually get a certificate. And I remember getting for Christmas, we would give Walt Disney shares, and they had the characters on the actual printed certificate. They don't do that anymore, but they used to. All the companies used to have the physical shares, right? Not so on the European options. We'll talk about that in a second. The other thing too is that if you get called out, for example, you write a covered call on something, we've all done this, you write a covered call on something and you get called out, you have to deliver shares to cover that obligation, right? Or if you get put to, you have to take shares, right? They're actual physical shares. There's not on the other side over here with European options, right? So we've got can be exercised any time. You're actually trading shares. It settles in stock. You either deliver stock or you take stock, or you get put to stock in this case. You have assignment risk at any time. You have dividend risk. If you're trading anything with a dividend, it can be taken away from you, right? Now over here, this is what we want to focus on today. So this is what I was saying. If you're trading any kind of serious money, you need to be trading the SPX, right? Now there are a couple of ways to trade the SPX. This is the major way. This is the one that is mostly institutional people trade, very liquid, lots of volume, right? They came out with a mini of this called SPY. We all know SPY. It's been around forever, since 1993, I believe. Now this is actually an ETF, right? Now that being the case, sorry, my drawing tool's not drawing. SPY is actually American style. So this can be called out. If you write covered calls or sell naked puts or whatever, you do the wheel strategy. We talk about that a lot on this channel. I wrote a book on it a while back. Those are American style. That's good. These are for different reasons. SPX, SPY, that's the reason they came out with SPY. Much more liquid, dollar-wide strikes, etc. The SPY is 1/10 of the SPX. And we've also got XSP, which is a mini SPX, and it's also 1/10, but it is European style. So what is this European style? What are you talking about? Where did they come up with European style? The cool thing, and I love this, is that European style can only be exercised at expiration. So if you buy or sell, say, leaps, I like doing leaps, and then maybe selling against it, that kind of thing. Um, a leap option, if you have, let's say, 1 year on the option, nothing can happen during that 1 year. It cannot be taken away from you. You can't be called out. You can't be put to, that kind of thing. It's only on the day it expires. So there, you don't have to worry about it. You can sleep at night. It cannot be exercised early, right? The other thing about it, when you're buying SPX or selling SPX, you cannot buy shares. There are no shares of SPX, right? It's cash settled. So for example, if you did some type of spread or whatever, it doesn't matter, and at the end of the trade, say you were upside down by, let's just say $1,000, I'm picking a number, $1,000, then you owe the broker $1,000. They will debit your account for $1,000. If you're profitable by $1,000, they deposit $1,000 cash into your account. So it's settled in cash, not shares. There are no shares, right? Again, no assignment risk, no dividend risk at all, right? You don't have to worry about that, right? So you really want to use this to your full advantage. And the one thing that's really, really cool that I didn't, let me clean this up a little bit, that I wanted, it's not on this chart, and this is not tax advice, but these are considered a 1256, you can Google that, 1256 contract. So what that is, and let me write that down, 1256 contract gets favorable tax treatment. Why do you think the institutional guys use it? I use them all the time. I mean, this is my bread and butter right here, right? Okay, so 60% long-term gain, 40% short-term gain. That's amazing, right? Well, guess what? They are not, these wash sales do not affect these, right? Wash sales are not allowed on 1256 contracts. Now again, I'm not an accountant. Don't take tax advice from me. Do Google, use AI. It's out there for the reason. But if we're trading often, you're going to have overlapping trades, and you're going to have a loss here and a gain here, and then a gain and a loss, or whatever the scenario is, right? Under normal circumstances, you would have a wash sale. You sell a stock, you can't buy it for the 30-day window, or you'll have a wash sale and the loss will be disallowed, that type thing. Again, not tax advice, but you do not have to worry about that with these European options, which are SPX. And I'll go ahead and tell you the NDX for the NASDAQ, if you're trading the NASDAQ, and then the RUT is for the Russell. These are all indexes. S&P 500, this is the NASDAQ, and that's the Russell 2000. Now, those are all European style. They're all indexes. The last one that does trade is VIX. The VIX, we like to trade the VIX because of the volatility. You've heard the fear factor or the fear index, whatever, VIX. That is also a European option. So keep all that in mind. We're going to focus on the S&P 500, but there's even one little level deeper that you really need to know. Again, I'm trying to keep everybody out of trouble here, and I see this over and over and over again. I think I mentioned I've been trading professionally for over 35 years, and I've coached and mentored thousands of people. I used to train hedge fund managers way back in the day. So let's go here to the trade tab, and I'll show you this. So check this out. This is our options chain. If you're not familiar with this, this platform is Thinkorswim, Charles Schwab. Any option chain is going to look similar to this. So if we go out here and look, we've got of course all of our weekly options, expirations here. Now, way back in the day, as my kids say, when the dinosaurs were roaming around, we only had, options expired on the third Friday of the month. That's it. That's all we had. Then we added, the weeklies, and then we started adding the dailies, and it's just so cool. It allows us so much flexibility to be able to customize our trades to do what we want to do. And again, if you're managing, your retirement account, or you're really growing some serious money, or going to build a sizable portfolio, you've got to be trading the SPX, right? So, weeklies, the AMs here, these are the monthlies. Again, we're talking about the SPX, we're talking about the European style options, and these, the third Friday of the month, they're going to have an AM designation, right? So 12 times a year, you're going to get the monthly expiration, third Friday of the month. and let me show you how that works. So here is, if you look, you see 20, sorry, my drawing tools on this monitor over here. 20 March, 20 March. Why are there two expirations that say the same date? Notice 7 days to expiration, 8 days to expiration. This is a monthly option. This is a weekly option. This is why I wanted to give you guys a heads up. Super simple if you know what to look for and what to avoid. This can save you a ton of money just by being aware of it, right? So how does that work? Well, on the monthly options, again, sorry, I'm getting my drawing tool. On the monthly options, you see how it says AM? These 7 days left when I'm recording this video, it's March the 12th. So 7 days from now, that will be Thursday. So Thursday, when the market closes, these options will stop trading. They will expire. That's it. It's done. Thursday at the close, right? Well, guess what? They're not priced on the closing price. If you buy shares of Apple or Amazon or Home Depot or whatever, when the closing bell rings, ding, 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 and it's sitting at $150 for the price of the stock, that's the price, right? Not so with these. That's the key. You got to be careful. So again, Thursday close, the options stop trading. Guess what? Friday open is when they're priced. That's why they call them AMs. AM. So guess what? You can't do anything on Friday. That I always tell people, you've got to close those options before the close of the day on Thursday. If you're trading the AMs, right? Very, very, very important. Because here's what can happen. You have a giant profit, and I did this. I used to trade with a guy, and we traded a lot of NDX and big size. And I kept telling him I'll close those things out, on Thursday, and he wouldn't listen because he was smarter than everybody else, and he was a good trader. And it only takes one time to learn your lesson because you've got a profit. Oh, I'll just let them expire, I'll let them go. Well, then you have a giant overnight action, overnight move, and the Nasdaq's up or down, 600 points or whatever, and you get blasted in the morning. And you don't have to do that. It's the easiest thing to avoid, right? So Thursday close, the option stops trading. There is no more option. It's done. You cannot trade it on Friday. But when Friday opens up, again on SPX, ding, 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 opening bell, that is what the price is calculated off of. And a little bit deeper for you guys that know this or have been around for a little while, all 500 stocks in the S&P have to trade before that number is calculated. So again, back in the olden days, it might be an hour or two before that value was given to you. You didn't know. So you got to be really careful about that. Okay, now because of electronic trading, it's much, much faster. It's still not instant, but it's much faster. The symbol to check that is called SET. That's a settlement value. You can see it. I looked at it a minute ago. Opening flex settlement value. So that would come out on Friday morning, showing you what your Thursday expiring options are priced at. It's kind of weird, right, that you don't know the price until the next day. Again, don't get caught up in that trap. Now, one last thing here on this topic is that these are so these are AM priced on Friday morning. These are PM. Guess when these are priced? Friday closing bell. Ding, 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 closing bell. PM is when they're priced. These are ding, 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 opening bell Friday. They're both priced on Friday. Again, that's why they're like that. Very cool how they do it. Again, these we used to actually, to get even deeper, back in the day, there was a symbol, and it literally was SPXPM. Different symbol. So we could do trades on this one, and we didn't have to worry about overlapping trades and canceling strikes and all that kind of fun stuff, and now they just they did away with these, and that was maybe I don't know 7 years ago or 8 years ago or whatever, and they kind of blended them all together. Now we've got the weeklies and the daily expirations. But if you notice over here, look, AM here, AM here, AM, AM, AM. So there's 12 times a year when you have to worry about that. But be careful of that. Also, another thing I want to mention here, these will have a lot more, the AMs always have a lot more liquidity let's go out here to 17 April, and let's do, this is good to know. So if you're trying to put a trade on out here, so April, there's already 4,000 contracts. There's 17,000 over there. There's a lot going on. So let's go, so 17 April, look, let's go 17 April the next day. Crickets, 10, 63, 200. So there's all these, because this is institutional. The institutional guys, we all use this, the AMs, right? So keep that in mind if you're building a trade. Now, in building trades, I use these all the time. I'm always in SPX trades. Again, I use it, and I will use SPY as well. I use XSP a lot. If you want to know how to create some of those trades, let me know. I can help you. I've got a lot of videos out there, but also I have a daily trading room, and I'm in there all day long, and we're putting these trades on real time with real money. I'd love for you to come and join me and see what that's about. We'll put a link down here if you want to check that out. And otherwise, leave comments. Let me know what you're thinking. Let me know if this helps. Of course, like and subscribe and all that. But let me know if you want me to do a video on something. I am more than happy to do it. Just let me know and put it in the comments, and I will be glad to help you. So thanks for your time, guys. I try to keep it short, but a lot to cover here, and very important, again, keep you out of trouble and help you guys make some money. So thanks for your time, guys. I appreciate it. See you next time. Thanks.